Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. Hello and welcome to RIA Edge. This is Mark Bruno, Managing Director of the Wealth Management Group at Informa Connect. And we are very excited to have Reegan Rae, the co-CEO, Managing Principal, and Senior Investment Advisor at Arnerich Massena, join us here today out of Portland, Oregon, our first guest from Portland. Reegan, thank you so much for joining us.
Thank you, Mark. I'm very excited to be here today.
Now, you have an amazing story that is different from a lot of the other guests that we've had here on RIA Edge. When we talk about growth, we cover a lot of ground, but so much of what we've covered over the last year or so has been about M&A. I mean, it just dominates the headlines in the RIA industry at a good portion of the year. But you've had some tremendous growth without having to do major acquisitions, right? So I cannot wait to get into the weeds. But before we do that, I think it'd be really important, Reegan, if you wouldn't mind just giving a brief introduction to your firm for those listeners that may not be familiar, and a little bit of the history and how you've gotten to where you are as one of the largest and fastest growing RIAs in the business. So please tell us about Arnerich Massena.
Sure. So Arnerich Massena was started in 1991 by Tony Arnerich and Lisa Massena. And I think from the very beginning, one thing that made us really unique as an RIA is that we served three different client types. So we worked with retirement plans, endowments and foundations, and high net worth individuals and families. And that model served us well for a really long time. Up until about 10 years ago, which is when I came to the firm, we really started to realize that the ability to serve three different clients meant that we had to, from an internal perspective, essentially have three different platforms and service models that had very differing needs, as well as skill sets and expertise from a staffing standpoint. So we started on a journey to really identify what is our best, highest use from a value standpoint in terms of the types of clients that we serve best. And after we did a lot of sort of internal dialoguing and soul searching, we realized that we offer and we are the most unique with multi-generational wealth, so high net worth families, as well as endowments and foundations. We specialize on discretionary client services, alternatives, so hedge funds, private equity, private real estate. And those two client types, high net worth and endowment and foundations, have a very sort of perfect overlap of internal resources. So we went down the path of selling our retirement plan business, which, we just recently wrapped up in 2021. So where we are today, we are specialized in high net worth and endowments and foundations. And that also, along the way, we had our founder who was, we needed to structure a buyout for him. And I'm sure, as other RIA guests have maybe shared in the past, it's a very challenging thing in our industry to honor founders or previous generations of equity owners, because that traditional financing model doesn't really apply to a service-oriented company, right? We don't have tangible assets to collateralize for external financing. And I think the industry is evolving and there are options out there. Mm-hmm. However, when we did this 5 years ago, we didn't really have our internal house in order to where some of those options were really beneficial to us. And so we went into this journey of sort of transacting our own internal buyout. So it took a lot of work. And I'm very proud of the fact that at the end of 2021, we were able to secure outside financing. We were able to honor and pay our founder. We are 100% employee owned and operated. We were able to maintain our independence, which is a huge part of our offering to our clients. And I think we have really built a solid foundation to build from this point forward. So I'm really excited about the growth initiatives of the company moving forward.
I appreciate that. And I think one, I should correct myself. I said you hadn't engaged in M&A when you've clearly sold off the retirement business and you did an internal transaction. So that is M&A, but you're not acquiring growth, right, in the way that a lot of firms are right now. And two, the way you just kind of walk through what can sometimes be called, the founder's dilemma, right, is really important. And I think something that, the vast majority of our listeners are thinking about, if not working on. And your point about getting your house in order, not only does it help the business now, right, but it just sets you up to do so many other things, right? And you're on a straight path, right? You can distribute equity, better alignment of interest, and I'm sure we'll get into all of that. So thank you for framing the conversation. I think it's really interesting and very consistent with the types of conversations that I know large RIA firms are having internally, but we may not always be able to have the opportunity to share. So with that, as you think about growth, and you mentioned, where you're focusing for the future and a more defined view of your, ideal client and client types, can you just talk about how you actually think about growth? And essentially, are there certain areas of emphasis, whether it's your existing clients or acquiring new clients, that you think will fuel your growth moving forward?
Sure. Well, growth is always part of our strategic plan for every year. We start the year really looking at, what do we want to achieve this year from a growth standpoint, and how do we want to go about it? So it is always a primary focus for us. And as a 30-year firm, we've been very fortunate to have experienced really healthy growth year over year, typically in the 7 to 10% range. And how do we do that is really through existing client growth as well as new client acquisitions. Because we've worked with these legacy multi-generational wealth families, sort of by default, we've had to become experts in working with different generations. So that's been an area that we've been very successful in and have received a lot of referrals from existing clients, who have peers that need the same sort of, needs, goals, objectives. So that's been a great area of growth for us, as well as just having dedicated resources within the firm that are really focused on sourcing new client relationships.
Just on that final point, that was a question I was eventually going to ask, but while we're on the subject, what are those dedicated resources? I've seen some firms that, they just spread it across the whole team or individual advisors, some that have business development officers. And I'm very curious, one, how you have resourced it and what the specific positions are, and two, how it's played out.
Sure. Well, in my 10 years at Arnerich Massena, we've done all of the above. We've had individual advisor goals. We've had team goals. Both can be successful. And at the time that I was hired in 2011, we created and brought in a dedicated business development officer. And the role of that BD position is really centered on working and identifying strategic partnerships, really focusing on centers of influence and getting really clear about who they are. Do they understand our client profile, understand our value proposition, who can be a great brand ambassador for us and vice versa. And those, when I talk with other RIAs in the industry, one thing that's very key with these business development positions is you really have to give it time. It's not an overnight, flip the switch and these new relationships are going to be coming to you. It takes a lot of time to nurture and grow those centers of influence and other strategic partners. So we realized that going in, and it really took 4 or 5 years until we started to see an ROI on those dedicated initiatives. So that's been really key. I think the other thing that's really important is outside of the business development position, we incent our advisors and our shareholders to actively contribute to the success of our growth year over year. So it's part of our compensation structure. It's part of what we measure in terms of individual contribution. And I think it's just a cultural understanding that we can't leave it to just one individual, that we all need to contribute. So what that can look like is, for example, we ask that all of our shareholders have a sort of external view in terms of engagement in the community, whether that's sitting on nonprofit boards or attending specific events. And so we're not measuring it in terms of dollars brought in. We're more focused on the behavior that will drive that ultimate, end goal, being new revenue.
Excellent. I appreciate that. I have to say, I'm familiar with a lot of firms that have dedicated business development officers or specialists, but this is the first time I'm actually hearing about one that is more focused on, relationship COIs, referrals, than actually going out and, acquiring clients. And I'm glad you brought it up because I've heard mixed things about these types of roles. I've seen instances where, I had in my consulting, career, some firms where they had a business development specialist. They'd go out, they'd acquire clients. And then as soon as they would sign the paperwork, they were transitioned to another advisor in the firm. And it kind of felt like a bait and switch. Like, I bought you, not the business. Right. So I think, what you have just mapped out is a great example for our audience to just listen to and learn from. It also sounds like just the way you're talking about compensation and the team approach, growth is part of your DNA. And it's not just something that you've given to a single person there. So I appreciate you walking through your structure, but also 5 years, right? That's a long time.
It is.
There are very few industries where salespeople have 5 years to show a return. Right.
Well, and I think they are also responding to, inquiry of potential new clients and playing a big role in that sales process. But
Sure.
We learned to avoid the issue that you brought up, that bait and switch. We learned really early on, okay, this person is really good from a sales standpoint. We also need to be introducing whoever that primary advisor is going to be very early on in the sales process, so that there's more of an organic, natural transition when the BD officer needs to sort of step away. But the other thing that they do, and I'm glad you brought that up, is they also play sort of a relationship management function for clients within the firm. So every year we publish a pretty substantial client satisfaction survey. It goes out to all clients, so they have the ability to comment on what we're doing well, what they want to see us do better. But the BD officer also, through feedback from advisors, will make an effort to call specific clients, maybe that we know we could be doing a better job at, or might be at risk, and just spending the time getting feedback from clients. And so we view that BD role sort of as a neutral position where a client might be more open and willing to provide feedback versus their advisor themselves. That feels a little more personalized and targeted. So that also makes them improves, I believe, their ability to focus on that ideal client and give all of our team feedback on what we can be doing better. So it's not just growth oriented, it's also very relationship focused, because that's what we're in, right? The relationship industry.
Definitely, especially when you talk to the multi-generational clients that you have, right? It becomes even that much more important. And I do also want to go back to the growth rates that you mentioned earlier. We're actually in the process right now of developing an RIA Edge research study. So we'll be launching it next week, the week of the January 24th. It'll be out in the field for a while. And one of the things that we're really looking to understand are the growth targets and expectations, and what's good. I think it varies at every firm. You mentioned 7 to 10% is sort of typical. And just to clarify, is that excluding market appreciation? That's all organic, true organic growth?
Yes, that's net new revenue. Mm-hmm.
All right. How do you measure, right, success, right, from a growth perspective, right? Especially in your market, which may be niche or narrow. 7 to 10% annually sounds great, but how do you measure your growth rates relative to the opportunity in your market?
Sure. Well, I think we have learned a lot in the last year. One thing that we did last year for the first time is we hired a valuation specialist to help us through a formula of valuing the firm. And we learned a lot through that process of working with that partner. And one thing that they brought to our attention is, if we were going to engage in an M&A conversation in the future, and when we bring on new partners or retire current partners, knowing what our valuation is and how that is viewed through those different lenses is really important. And they also provided us with sort of targets for margin. And so that brought to our attention areas that we really need to focus on moving forward. So, top line growth is really important. Managing your operating expenses is the other component of that, which in our industry, the majority of our annual expenses is going to be in compensation because we all have highly compensated individuals in our advisors and other executives. So managing those two to drive towards a margin target was very eye-opening for us, where we're like, oh, okay, so now we're coming at this from a whole different angle. And so that's another way that it's like, okay, now we need to get our house in order from this standpoint, which is very critical to how we're going to be tracking or validating our success for the next few years.
Yeah.
We also participate in as many peer group benchmark studies we can. So I'm very interested in the one that you just mentioned. Our custodian is Schwab, so we participate in the Schwab benchmarking study annual. The valuation specialist that we worked with also has their own study that they're, pulling information from all of their other client sources. So I think it's just being aware of what's going on in the industry and how someone from an outside perspective would be viewing your balance sheet is really important for us.
Yeah, I'm glad you brought that up because it isn't just about growth. It's about where do you want to go, and what's the desired outcome, right? And if you're managing towards a specific target, right, a specific income that you're looking to generate, it becomes a very different equation. And having produced benchmarking studies for 10 years of my life, it makes me feel very happy inside to hear that you have an appreciation for it. So we'll be sure to share more with you on the RIA Edge study and our audience and our listeners as it develops. I am curious, as you're kind of looking and you're looking at 2022 and beyond, where do you see your growth coming from moving forward? I mean, do you see yourself getting into new markets? Do you see yourself potentially doing M&A at some stage? What's your view on the growth opportunities that are ahead for you in the firm?
I would say all of the above that you just mentioned. So we have one physical office currently, which is here in Portland. However, our clients are all over the country. So we have pockets of clients in Minneapolis, on the East Coast, in Florida, in California. We have these hubs. And so one thing we're looking at this year is, should we open sort of a second footprint in one of these areas that we've been pretty successful in, but have never really had a dedicated resource to grow in that market? So that's one thing we're thinking about. We have created some of our own products historically. So we had a private equity fund. We created our own access vehicle, so a hedged fund of funds. We do not collect the underlying management fee on that currently, but it's one thing that we have thought about is, we have a phenomenal research and analytics team. Is this something we could also be doing, is creating opportunities for accredited and qualified investors and be marketing that to clients who are not within Arnerich Massena? Could that be another revenue stream for us? So that's a conversation we're currently having, as well as being open to opportunities within M&A on both sides of the transaction. So are we open to being acquired by another firm? Should we be looking for advisors with a really healthy book of business to fold into our company? I think we're finally at that point where we feel ready to engage in that conversation, because from a governance standpoint, we feel like we're finally there and we have an understanding of what we're looking for. And I think that the one thing that is sort of our North Star in those conversations of M&A is that, first and foremost, our clients have to benefit from it in some way, shape, or form. Secondly, we want our staff to benefit from it. And then lastly, our shareholders. And I think that's a unique dynamic, because I think most RIAs go in it from, is this going to benefit the shareholders? And then my clients, and then my staff. And so that might, and we're very aware of it, rule out a big percentage of those conversations. But I don't know. I think we're just coming at this for the first time with sort of a level of curiosity, like what is out there, what is available to us, what are we, we know what we're looking for, but now who would engage in that conversation with us?
Yeah, no, I appreciate you sharing that. And I would say it's interesting being a third party that gets to observe all of it. There are more options than ever before for RIAs right
Absolutely.
now. You talked about the financing sources earlier, and then even looking at on the M&A side of things, not only are there more professional buyers, potentially more sellers than ever, but you have in between solutions, right? You have the minority investors, right? And they all offer different things. And the more growth you have, right, and the more scalable your business, the more options you have. So clearly you've done the work and deserved all the options. So congratulations on getting to the point that you are now. A lot of difficult decisions ahead, but that's the fun part, I think, right?
Yes, absolutely.
So before we wrap up this episode of Our Age, I did want to ask you, we've covered a lot and you've given us some very good detail and insights into your strategy and how you think about growth. Is there anything I didn't ask that I should?
I think it's very common that RIAs remain sort of in silos or vacuums where the sharing of information from one peer to the next sometimes can feel like, well, I'm not going to share my secret sauce because What if they take it from me? What if I lose my competitive advantage? So I feel that can sometimes, sometimes ideas are worth spreading and sharing so that we can grow and evolve. And so I think one thing, at least from our perspective, being in Portland, Oregon, is how do you find out about opportunities in the M&A space? Mm-hmm. And we've asked questions to certain partners and resources that we have. And usually what I hear is, well, usually it works well if you have a relationship, if you've identified. I'm like, okay, well, that makes sense. But, I would be curious to learn from you and from your perspective and conversations that you've had from other listeners, where are firms going to initiate the conversations or say, hey, we have a shingle out where we're looking to be merged or acquired or acquire advisors?
Yeah. And there's no single path, but it's usually one of two ways or three. You mentioned one being the relationships. There are so many professional buyers now that have dedicated deal teams, and they are effectively doing as much outreach as humanly possible to high quality firms because there's a limited supply. So a lot of M&A activity could just be initiated by that. But I would say there are a handful, not a lot, maybe about a half a dozen investment banking firms that are specialists, and they know the business as well as anyone, inside and out, but they also know the market. And they have a true understanding of what the difference is between a high quality RIA and one that may have the same assets under management, similar looking financials, right? But the growth potential will be different at the two firms. So, I would say to anyone who's thinking about that M&A journey, do your homework. Not hard to find. There are 6 or 7 firms that specialize in RIA M&A, and it's a difficult thing to do on your own. You not only need that outside expertise, but you need a coach who can kind of manage you through the process, keep you from getting too distracted by the deal process, right? And still running a great business, and make sure that in the end, the priorities you mapped out before, is it good for the clients? Is it good for the staff? Is it good for the shareholders, right? Those priorities stay in that order, because the deal making process has its own energy, and things can change very, very quickly. So I appreciate you ending on that note. I appreciate you asking that question. It's a great question. And we're happy to share additional thoughts with you and other listeners if anybody has any questions about some specific firms and areas of expertise out there that we can help with. But Reegan, thank you so much for stopping by RIA Edge. I have to say, this is exactly the type of conversation I was hoping for. It's also exactly the type of conversation that we'll be holding at our main event, Wealth Management Edge, and within our RIA Edge community later this year. The event May 31st through June 3rd in Hollywood, Florida. And we certainly like to keep you and our listeners posted on that. This is a great example of how you build a high quality business that has a number of options and opportunities in front of you. So Reegan, thank you so much for joining us.
Well, you're welcome, Mark. And it was lovely to be here and to meet you. And I look forward to staying connected with you in the future.
Same here, Reegan Rae. Appreciate it once again. And thank you to all the listeners for tuning in to this episode of RIA Edge. Again, my name is Mark Bruno. We appreciate you all logging on, downloading this, and we ask you to subscribe to RIA Edge so you can get notifications and alert of every new episode that comes out. Again, on behalf of Informa Connect and Wealth Management, thank you very much for joining us, and we'll see you on the next episode of RIA Edge. Schwab Advisor Services is proud to support the RIA Edge podcast, and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.